if you have supply side inflation, see, the Fed doesn't have any supply side tools, right? The Fed doesn't drill for oil. They don't drive trucks. They don't plant crops. What they can do is work on the demand side to get interest rates high enough, mortgage rates high enough, money tight enough, et cetera. It will crush demand. But since the inflation is coming from the supply side, not the demand side, how much do you have to crush demand to actually reduce inflation? You've got to squash it like a bug. I mean, you really have to destroy it to the point that you're going to get this recession and a severe one. And bear in mind, behind the curtain of the international monetary system is this liquidity crisis, which I described, which is not directly related to either the supply side or the recession. I mean, those are economic phenomena that have a life of their own, but you throw a liquidity crisis on top of it. And again, 1998 was an example of a global liquidity crisis there was no recession. I mean, the economy, the macro economy was doing fine, and we went for 2 more years. NASDAQ went to, it crashed 85%, but, NASDAQ peaked in January 1st, 2000. So, 99 and 98 and 99, after the Russia long-term capital management crisis, that was when, you had the sock puppet and JDSU and, all these tech stocks going to the moon, et cetera. But there was no recession. But we're kind of heading for both. And the Fed doesn't see either one of them. They're not looking. Hey, it's not like I have secret data, like I broke into a safe or something. I mean, the data's there. They just don't know enough to look at it. They don't understand. Janet Yellen, she's a treasury. She doesn't understand any of this. I don't know what she's a labor economist and a statistics geek. I've seen no sign that she knows anything about monetary policy or fiscal policy. Powell's better. I think he has the benefit of being a lawyer instead of an economist. I think economists can be a handicap in the situation, but lawyers are good at looking at both sides of the issue and being balanced. But he relies on the staff, and the staff doesn't really understand what we're talking about. There are actually very few people who do. And so the system's flashing red, in the famous words of George Tenet, but no one's looking. If you don't distinguish between the supply side and the demand side the way I just did, you're going to miss what we're talking about. You're not going to get it, because if this were coming from the demand side, I would, coal seam fire, keep raising rates, do what you have to do, beat Paul Volcker. That might be the solution. That is not the problem. The problem is coming from the supply side, the supply chain, which of course is what my book is about. And it's breaking down in new ways. And people say, hey, today, because a year ago or 6 months ago when I was writing parts of the book, there was a shortage of containers. The cargo vessel containers that they move stuff in, intermodal and all that. And there was a shortage and the prices were skyrocketing. Today, the prices have come down so far that the governor of Arizona is using them to build Stack 2 High, which is like 40 feet, to build this great wall along the Arizona-Mexico border, which is great because they're cheap and that's quick to do. And if you punch a hole in the container, you're just inside the container. You got to get out the other side. So everyone's like, oh, the supply chain crisis is over. No, maybe the container crisis is over, but the supply chain crisis is far from over. Just look at what's going on with diesel fuel. We're down to 25 days supply, probably going to run out around November 21st. I mean, run out. That will shut down the economy faster than COVID, pandemic, war, anything you can think of. And people go, well, normal supply is around 30, so what's the big deal if it's 25 days? The answer is you can't replace it. If you go from 30 to 25 days supply, we say, okay, fill up the tank, send me some more diesel, get it back to 30. Okay, that's not what's happening. They can't replace it because the constraint, it's not crude oil, there's no oil shortage, it's refining capacity. You don't put crude oil in a truck gas tank, you put diesel fuel, but you got to run it, it's a distilled product, you got to run it through a refinery. And there's a severe refinery shortage, a couple of them are constrained, a couple of them are shut down. And this stuff isn't fungible. I mean, for gasoline and kerosene, jet fuel, you want what's called light sweet crude, which is lower sulfur content, lower viscosity. For diesel, they like the heavier, the thick, the blacker stuff. Well, that comes from Russia. I mean, so this is the point I make about the supply chain. And I go on, in some depth about this. But the bottom line is the supply chain is not part of the economy. The supply chain is the economy. Everything you can think of, from my microphone to your camera to furniture to your studio, comes from the supply chain, the clothes we're wearing, the food we eat, everything. And so if that is dysfunctional, which it is, it's the start of enormous economic problems. I think the United States, of all countries, is in the best position to take advantage of this new supply chain world that I've described. Now, we're very capable of screwing up with bad public policy, and we're going through a really rough patch right now. I mean, Biden, I don't know what to say. I mean, he's not really in charge. The people who are don't understand the economy, don't understand what we're talking about. They live in an ideological bubble. This whole I call it the Green New scam. You know, the real science of climate change, there's no existential crisis. There's no imminent catastrophe. Sea levels are rising 7 inches every 100 years, which they have been for a long time, by the way, long before carbon emissions grew. That's not anything related to carbon, and it's not going to inundate the New York City subways ever. So, but that is driving policy. You know, Germany just announced yesterday that they're reopening, I believe it's 5 or 7 coal-burning plants. And by the way, they burn lignite, which is a really particularly dirty form of coal. Please don't tell Greta. I don't want to ruin her day. But the point being, yeah, they're turning on their uranium plants. They're opening new coal plants. Wind doesn't work. Solar doesn't work. By the way, where I'm coming to you, everything you're looking at is solar-powered off-grid. It's the largest non-commercial off-grid solar field in New England. But I didn't build it because of the Green New scam. I built it in case the power grid goes down. That's a separate issue. But the point being, yeah, with bad public policy, we can screw it up. But assuming that's not the case, the U.S. stands to benefit. I mean, Taiwan Semiconductor just recently announced $10 billion plus investment in a new fabrication plant for semiconductors. I believe it's in Texas. Intel's building something comparable in Oregon. Well, why all of a sudden are all the semiconductor people building huge plants in the United States, not in Taiwan or China for that matter? Well, the answer is we have a plan, the military has a plan called the broken nest theory. If China invades Taiwan, I don't know what the 7th Fleet might do, but I do know that we will destroy Taiwan Semiconductor's facilities in Taiwan. Like if the Chinese take over, there'll be nothing left. That's why Taiwan's moving into the United States. So to your question, Adam, and to my point, the U.S. will be the biggest beneficiary of this because we have the greatest capability to do it, and you know, and friendly trading partners like Japan and Australia and Canada and others. Although Canada's leaning a little in the fascist direction, maybe they'll align with China. But the point being, this new network will benefit the United States because we're in the best position to take advantage of it. The stock market's going to crash. I mean, just take everything we're saying. You know, recession, higher unemployment, lower margins, supply chain disruption, you know, et cetera. Energy disruptions, shutting down, that's going to destroy corporate profits. So that's in the cards. It doesn't mean the end of the world. It means you go